Hey there, folks. Wesley Eves coming to you again with another round of updates on the insurance market. It is December of 2023, and I'm going to talk about two things, both auto insurance and property insurance. That would be the homeowners and landlord, primarily from the personal lines insurance side right now. But before I dig into that, I want to say something which is a heartfelt thank you to my clients. I really appreciate you. This has been an extremely interesting year, to use the word loosely. Been doing this 21 years, and I've never seen anything like this in the industry. I've seen some crazy things, especially early on. In the early 2000s, there were some crazy times, and then after Hurricane Rita and Katrina in 2008, there was some 2005 actually, and 8 also again with Hurricane Ike. There were some property things that went on, but never anything like what we've seen this year. At least I haven't seen it. That is getting long-winded already. So before I get into those things with the auto and home insurance, I want to say thank you. Sincerely, thank you. Without you, this business does not exist. It's providing a way for me to provide for my family, and I truly appreciate that. I don't ever want you to think that I take anything for granted from you. I really do appreciate that, and I hope you understand that I do give it my greatest effort anytime anything with your insurance comes across my desk. Give it my full focus in order to get you the best coverage at the most competitive price that I can, to try to provide a quality product for you and your family at a reasonable, competitive rate, to keep at a reasonable, competitive, to try to find the best coverage for you at the best price that I absolutely can. So thank you, sincerely, thank you. And if you celebrate Christmas like me and my family, Merry Christmas. If you celebrate Hanukkah or Kwanzaa or any of the other, don't go there. So from my family to yours, thank you and Merry Christmas and a Happy New Year. So let's dive in. Auto insurance. We're beginning to see some green shoots. There is some competition that seems like it's starting to dip its toe back into the industry. We're seeing this in a couple of ways. One of the main ways, or two big ways, that companies really kind of shut down their new business, bringing on new policies. One was with underwriting guidelines. In other words, they take a very, very close and strict look at household claims. Doesn't matter at fault or not at fault. They look at that because money going out is money going out. So they do look at that. And they want to make sure that they're going to bring on profitable clients so that they can be competitive. You know, these companies, they want to grow. Their goal, yes, is to make money. They want to bring in competitive clients. So let's talk about the auto insurance first. We're starting to see some green shoots in the competitive landscape of the industry. Not yet from necessarily a rate standpoint or from an underwriting standpoint. When I say underwriting, I'm talking about the claims history of a particular policy household. What I'm talking about and what we're seeing here is one of the easiest things for them to kind of flip a switch on and off, and that is initial down payment requirements. That is one of the ways that they will throttle down new business. Some of you have experienced this year. I say, look, we've got this opportunity over here. This is your 6 or 12 month rate. First payment is this. Every payment after that will be much lower. Sometimes that's doable and sometimes it's not. And I completely understand that, especially seeing what some of the initial payments were. That can be very high threshold to overcome. Some companies are starting to bring that down into just kind of a flat, normal monthly payment plan. And that is good news. And hopefully that continues. One of the reasons we're starting to see that, I believe, is because parts cost and labor costs are starting to level out. But more than that, the inflation that we've seen on used car prices. Used car prices over the past few years have really shot up. We have started to see some actual decline from that, some not just leveling out. When inflation comes down, that means prices are leveling out, because inflation is a rate of acceleration, how fast things are going up. And if inflation goes to zero, the prices stay the same. If inflation then goes negative, then that means prices are coming down. Inflation hasn't yet leveled out to zero yet, and I don't anticipate that will happen. However, the used car market is helping to drive that number down, because used car prices have started to pull back. Whether that's just seasonality or not, it looks like it's something bigger than seasonality. So hopefully that continues, and it will make things more competitive for companies, and they can pass on a more competitive price. So hopefully we continue that with the auto insurance. Now, property insurance for both homeowners and landlord insurance. This is something that I was hopeful would be turning around. Still yet to be determined. One of the major driving factors in all of the increases that have happened this year is reinsurance. I've talked about reinsurance in other videos. That is the insurance behind an insurance company for major losses, major catastrophes. Reinsurance was beginning to see their limits and their deductibles get breached, and they were starting to take on more and more losses. And that was causing them to go to the retail companies, force them to increase essentially their deductibles, as well as to adjust their rates and say, look, you've got to bring on more cash, and you've got to adjust rates. You've got to deconcentrate your areas of risk. In other words, if you have you and both of your neighbors on both sides are both covered by the same home insurance company, and a tornado comes through, they've got that risk times 3 right there. Whereas if it's all 3 of you are a different company, that risk is spread out even more. Those 3 companies have less risk than one who's taking on all 3 right there. And depending on year to year, that could be a very common thing. And so some companies are getting very specific on certain zip codes, certain counties across the state, and different things are happening. And we were starting to see some opening up of new business come into certain areas. And I was hoping to see that increase and that accelerate. We'll see what happens after the reinsurance contracts are renewed coming in January. Most of them renew in January, and so we'll see what happens after that. Right now, those retail companies are holding things very, very close to the chest and not letting anything out right now. But something that kind of punched me in the gut not long ago, it was over the weekend, I got the email with a report from one of the major reinsurance companies in the world, Swiss Re. If you've ever heard of a reinsurance company, that might be the only one you've ever heard of. They are one of the largest, one of the most common. And what they are showing is that there is actually a new reason this past year for reinsurance to be kicking in and to cause major catastrophe losses. One of the things that I mentioned in prior videos was an increase in frequency of catastrophe, weather catastrophes. Blame it on whatever you want, freak storms, whatever, doesn't matter. It is what it is. One of the things added on top of that they're showing for this year is a new cause that has popped up as a major source kind of for the first time, and that would be just your common thunderstorm. One of the reasons behind that, a normal thunderstorm is going to come through and it's going to do some wind damage, it's going to do some rain damage, it is going to blow down some limbs and have some limbs fall on some cars, some on homes, and they're going to be kind of spotty, and they're not going to be enormous in and of themselves in any one location. Now, spread across a whole area, it might do a fair amount of damage. In the past, those amounts of damage were not breaching the deductible for the retail companies and getting into the reinsurance. That's changed this year. Those amounts of damage that are being caused by these thunderstorms has gotten significant enough where those individual events are breaching those deductibles, causing it to get into reinsurance more and more often. Um, those have seen some major increases over the last few years, and this past year really started to kick in and go over those levels. So that's going to be a major factor going forward. How is that going to change the landscape? Yet to be determined. Um, but one of the reasons behind that is the increase in costs of material and labors that have happened into 2023. So as those parts, as the materials become more expensive, as the labor becomes more expensive, those get passed into claim costs. And that has become very evident this year. So the frequency has increased over the last few years. They were getting comfortable with the frequency, but now the severity in the form of dollars of money, dollars going out for each claim, that is becoming a factor as well. I was kind of hopeful. Maybe it's the optimist in me who was hoping that things were going to turn around in 2024, and then this comes out. So I don't know yet where that's going to take things. You would think with the way deductibles on personal homeowners policies are set up, being mainly, for the most part, a percentage of your home's coverage, that as material and labor costs go up, the amount of insurance on your home goes up, therefore driving the deductible up as well, that would take care of it, but it doesn't seem to have actually done that. I don't have the detail behind the report. These are just things that I'm looking at intuitively from a 30,000 foot level. We'll see where it goes. But I would look for valuations to increase again this year. That is most likely going to happen, which will drive deductibles up. But when valuations go up, prices do go up as well. We don't know any of these things for certain just yet. So we'll see what happens and where things go. But rest assured, what we will be doing here is, as renewals come through, we will be on those about a month in advance. We will be looking at those to make sure that there's nothing that we can do with the actual policy itself that's renewing versus taking a look and remarketing it if needed. We'll be in touch with you on those things, and we'll let you know how those turn out. But until then, I wish you the best. Again, from the bottom of my heart, thank you. I truly do appreciate you. Never want to make anyone, really do appreciate you, and want to make sure that you know that, and that we don't exist without you. So thank you. Merry Christmas, Happy New Year, and until next time, have a good day.